to the Weekly Spark, your fast 5-minute flash of insight into the world of mortgage and real estate. Every week, we're here to ignite your understanding of the market, from mortgage rates and housing trends to legislative updates and insider strategies. So let's strike the match and spark your week. This is the Weekly Spark.
What's up? Welcome back to another Weekly Spark. Ryan and Jason, Creative First Mortgage. Jason, let's jump right in.
Let's do it.
First topic, are we getting rate cuts in December or not?
Man, Ryan, the feds can't make up their minds, right? So back in October, there was an 80% chance that the feds were going to strap up their boots, cut the rates, and move on to getting this economy going. But now that the hawkish sentiment is coming out of the Fed, so I'll back up. So the Fed minutes from October 29th, they had a meeting and they released the data yesterday afternoon. The overall tone was just more hawkish, right? So even though the jobs are slowing and even though the jobs data is not doing well, they're still worried about inflation. So based on what we're seeing, it does not appear likely that the feds are going to cut rates on December 10th, Ryan.
All right, guess we'll wait for the next one.
Yep.
Thanks, J-Pal. All right, should your buyer wait to purchase a home? I know you get some cool stuff for us here.
So leading into what I've been talking about, a lot of our realtor friends may be saying, well, gosh, we really thought rates were going to be lower at this time this year. I think a lot of people had that same sentiment, right? But, you know, for buyers that are on the fence, this is a great tool, realtors, that we can market together and be very, very knowledgeable on how we can teach our customers the cost of waiting versus buying now. So Ryan, if you want to share my screen, we've got some really cool tools that we do to help buyers with this exact situation. So I saved a scenario here, guys. So just follow with me, right? This is called the cost of waiting. So here's Joe Blow here trying to buy a house in the Bluff Park area. And I'm going to load up his information here. All right. So let's say Joe Blow is looking to buy a house around the 400,000 price range, right? So what I'm doing is I'm putting the data of the annual taxes, the monthly insurance, and then the forecasted appreciation, which is important. And we'll get to that in a minute. So now let's look at the loan. So the 30-year average right now is about 6.25. So let's just say this borrower says, you know what, I want to wait for rates to get to 5.25. Well, let's see if that's a smart idea. We've got a 5% conventional loan at 6.25. I went ahead and put all of the data in here, how much the mortgage insurance is. We're putting in the closing costs. We're putting in the escrows. Now let's see the cost of waiting. So let's say this borrower wanted to wait a year for this rate to get down to 5.25. We've got the closing costs in here. So here's one thing. The estimated purchase price, if they waited, the purchase price is actually going to be higher based on appreciation. We're going to take all of this data. And if I'm going too fast, guys, shoot me an email. We can go walk through real scenarios here, but I'm going to show you what this report looks like. How much will it cost your buyer or our buyer to wait? Well, in 1 year, if we calculate the appreciation gains, but then we subtract how much they'll actually be saving, right? Because they're going to have a lower payment if they have a 5.25 versus a 6.25. We're accounting for that. We're also accounting for the cost of refinancing. Guys, the benefit still to buy today is over $12,000 on a year-over-year basis. So again, just one of the really, really cool things that we can use to help our buyers make the right decisions. And when the numbers are in front of them, the numbers don't lie. So again, get with us and we can show you exactly how this could be a winning strategy for buyers to buy now.
I think that leads us nicely into the last topic here. And this is a post I actually made today on Facebook, so I'm going to take this one, Jason. It's talking about focusing on what you know with your marketing. And a lot of times we're seeing people throwing out condos like, oh, buy this condo, and they don't understand anything about HOAs or condo questionnaires or the process of buying a home. We see a ton of people throwing out down payment assistance as a solution without understanding the repercussions down the line. Real estate agents, loan officers, who's ever watching this, start talking about what you know. It comes off as better content. It's cleaner. It's more crisp. Your responses to the questions that are going to follow are going to be easier coming out. You're not going to have to do research. You're not going to have to pretend you know what you're talking about. You don't have to be an expert on everything. If you focus on what you know in your content, the content finds the people it's supposed to find, and you're going to interact with people on a better level than just making stuff up and pretending you know it all. And I think that that's something that if people would take to heart in the real estate industry, we'd have a lot less misconception across the market.
Love it.
Awesome. Well,
Love it.
I appreciate you being on. That's our show for this week. We'll see you on the next one.
That's a wrap for this week's edition of the Weekly Spark, brought to you by Creative First Mortgage. If you've got questions or want us to cover something next week, please let us know, shoot us a message, and until then, keep your deals moving and keep your week lit. See you next time.